Good afternoon, Crossroads. Welcome to the first Nick and Matt show. Nick and myself will be doing this type of video hopefully every 2 weeks. Our goals are very simple. They're trying to keep you updated on the mortgages and the industry in general. Nick has already done one of these videos. It's called Anatomy of a Credit Report. And this one we're presenting today is going to be Seller's Concession. We're hoping the next video we bring you after this is Mortgages 101. This video will not be teaching you mortgages, but it'll give you a step-by-step of what happens in the mortgage process so you can get to the closing table with your clients in a smooth transaction. These videos will be short, no more than 10 to 20 minutes, and we're going to have some live classes for the next videos. So hopefully you'll join in on that. The last thing is, even if the loan isn't with us, please don't hesitate to call us on any scenario. If we can help, we will. Me and Nick consider ourselves family here, and we're all on the same team. So please don't hesitate to call us on anything. If we can help you, we will. I'm going to turn this over to Nick in just 1 second. I just have one other thing. Any topics you would like to hear about, please contact us, Chris, Nick, or myself, and we will try to get it on air for you. Now here's Nick. He's going to go over Seller's Concessions.
Hello, everybody. Welcome again to the first episode of the Nick and Matt Show. We've heard some of the agents ask for things like this, and with the help of Chris Stapiro and Matt and myself, we finally put something together. So today is Seller's Concessions. It is probably one of the biggest topics and questions we get from the agents on how to properly structure it where the mortgage company, no matter what mortgage company it is, will like it. So I'm going to run a scenario for everybody, and we're going to use a very simple round number purchase price. So if your client is buying a home for $200,000, okay, and the seller's concession is a round number of $10,000. It's very simple. You are going to now put on the contract $210,000 as the purchase price, and your down payment, whatever it is, 3%, 5%, 10%, 20% will now come off of that number. So for a simple math, if you're putting 10% down on $210,000, you take your 10% of $210,000, and that is now your amount of mortgage. It is very simple. There is zero need to complicate this, okay? I know a lot of people in the industry, some shy against seller's concession, but if you can get it and it makes the deal work for the borrowers, it is a very simple thing to do. Now, another common question that we get are percentages of seller's concession, because this varies with program. As you see on the screen behind me, I'm going to start from the top. Conventional mortgages have 3 different variables of seller's concession percentage-wise. Your first variable is anything from 3% down, which is your minimum conventional down payment, up till 9.99% down. You are only allowed a 3% seller's concession. This means 3% of the purchase price can now get built into the mortgage. If you see on the screen behind me, from 10% to 24.99% down payment, you are actually allowed to go to a 6% seller's concession. So now you just take the amount of the purchase price and you times 6%. That is how much of closing costs can be built in. This is very, very few and far between. 25% or more down payment, you could actually go to a 9% seller's concession. So if you're buying a $200,000 house, you could actually roll in $18,000 in closing costs. Only time this is used is when a borrower has the down payment, but the income is a little off, and we have to buy the rate down, because you can actually buy the interest rate down using seller's concession monies. One of the biggest caveats with seller's concession, it could only be for the amount of the closing costs. It cannot exceed the amount of the closing cost, as we will have to either lower the seller's concession or go back and lowers the sales price. Because if we lower the seller's concession and they don't adjust the sales price, the borrower will lose out on that money. It will go to the seller. Now, if you see behind me also, these figures are for primary residences only. You can do a seller's concession on an investment property or a non-owner occupied property. It is limited to 2% across the board. It is much, much less. Very rarely do we see a seller's concession on anything other than a primary residence. It's something that is almost like the white elephant out there. Now, a lot of your first-time home buyers are going to do FHA loans. This is cut and dry. All FHA loans are a 6% seller's concession across the board. It's been that way since the beginning of time, and I don't see it changing. USDA, where a lot of the Crossroads agents now lend in Holiday City, is USDA approved, Holiday City on Mule Road. So now that is also a 6% seller's concession across the board. Lastly, but not least, we cannot forget about our veterans, which is a 4% seller's concession. The VA allows for a flat 4%. So, to recap, and I believe we will make this available for download, this little chart, or we could email it to all the agents so you have it. We have a seller's concession percentages here, and we have when you are writing your contract. It is very, very simple. Whatever your seller's concession is going to be, you add that to the top of what you've negotiated that the seller needs to get. Once you have that, that is what you put your down payment off of. You put your down payment off of the bottom line number with the seller's concession built in. So when you call Matt or myself, or if, again, the loan is not with us, as Matt said, make sure you are telling your mortgage originator that we are buying the house for $200,000 plus 5, plus 6,000, plus 10,000, whatever it is, because there has been a lot of times where we've gotten a phone call and you'll tell me 210 minus this or 2, just tell us the number with the seller's concession. It will make everybody's life so much easier. You are never a bother. You could call us 100 times. We hope that this class was a kind of a door into what we see to make the mortgage transaction go smoother. It will limit the amount of addendums that you have to do, and it'll make your transaction easier. One last thing I do want to talk about, and that will conclude the class. If you ever have where you have an inspection issue and you do a late seller credit, it's not a seller's concession technically from the beginning, just get us one addendum for the amount. For example, if a inspection comes back poor and you negotiate on a $2,000 towards repairs, okay? Make sure your addendum just reads $2,000 towards closing costs. We don't want to know about repairs, as the lender doesn't care about repairs. That's the last thing we want to see. So as long as you make sure that you get us that addendum ASAP, as soon as you pretty much negotiate it out, it will not affect your closing time, and it will lead to much smoother transactions with little headache at the end. In conclusion, Matt and I always say it, we want to say thank you for the business, thank you for thinking about us, and we can't stress enough that any classes or anything you guys want to learn about, there is no topic that we probably haven't seen, or we can get a guest speaker onto a future podcast or future thing to let everybody know how to properly handle a situation. Thank you again, and those are my closings.
I just want to add that if you really think about it in a broad base, a lot of times when people come in to rent or they don't have a lot of money to put down, or any, sometimes it's good to have them call us, because these programs are made for that. And a lot of times when you say, well, they don't have any money, they can call us and we can try to figure out with you a way to make the deal work. So before you let anybody go, and that goes for, and Nick talked about this, I'm sure, during his credit program, was even if they say they don't have the greatest credit score, if we run it, sometimes we can fix it real fast And if you go back to his video, I'm sure did you talk about
Absolutely.
rapid rescores
Yep.
and stuff like that?
Absolutely.
I mean, there's more than one way to skin a cat. So some of these people that are, especially in today's market, you don't want to lose anybody. So a phone call to us, we don't mind. You're not bothering us. And believe it or not, a lot of times we can structure a deal so it can work. So as a last resort, give us a call. What's the worst that can happen?
Absolutely. We look forward to a really prosperous year this year for everybody. So please use Matt and myself as a resource, because that is what Mark, Chris, and everybody here instilled us into. So we are a resource for you, and we're here to help. No question is too silly. Doesn't matter if, again, even if you don't even have a deal and you want to make yourself better, always feel free to call us. One-to-one conversations. We're always available.
New agents especially, please call us. Even if we haven't met you, it's a good way to start a conversation. And last, stay safe.
Stay safe, guys, everybody. Thank you so much for tuning into the first episode. We'll see you soon.
Time.